Hello, traders. It's Wednesday, the 3rd of July, 2019. It's 8:01 a.m. Chicago time. Thanks for joining. This is episode number 1549. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. A reminder that today is the day before 4th of July, the 4th of July holiday that takes place tomorrow. The U.S. markets will be closed. The futures will be open till noon on the indices. I believe grains and others may be closed. One thing you need to note is that the U.S. cash markets, the New York Stock Exchange, and so on, are actually closing at noon, at 1 Eastern today. So the underlying market is likely to go out at about 1 Eastern, which is going to impact how the equities trade. I will not be trading once the equities close. There's just no point, in my opinion. There may still be opportunity, but it's just the odds are not in my favor, in my opinion. So those are two important things to note. As far as what's on deck in terms of news, there isn't all that much in play here. The major European PMI services data came out. The Eurozone, Germany, Italy, and Spain beat the PMI services number, and France and the UK missed that release. There was an announcement by the ECB yesterday that they're looking at IMF's Lagarde to take over as the ECB chair. Not sure what impact that may have on our markets, but it's out there. There's not much else to talk about in terms of news. There are no new announcements on the U.S.-China trade war or anything like that. This morning, we got initial jobless claims came in at slightly better, 221,000 versus 223,000. Continuing claims, 1.69 million versus 1.68, slightly worse. And then looking ahead at what may be in play today, ISM non-manufacturing coming out at 10 Eastern, and that'll be it. We do get factory orders. And then, of course, we get the EIA gas and crude oil inventories. Crude is expected to come in. Now, last time, crude came in at negative 12.788 million. It had a huge deficit or draw. Today, we're expecting a draw of 2.964 million barrels. Gasoline expecting a 2.167 million barrel draw. And that pretty much wraps up what is going to be released today. Let's take a look at what we expected yesterday versus what we got. I posted three scenarios, three key plays yesterday, and the primary of which is a dip down. I expected it to dip down into this neckline right here at 62.75, and then I expected an impulse up to push into 73.50 and for the market to sit sideways. There was a high expectation of an inside day yesterday. The secondary is to push into 73.75 area, pull back to the prior day's point of control, and then dip the other way into this 62.75 and also hold sideways. In the case of a continuation of the trend, I expected an open test down to 63, drive into 79.75, potentially higher. Here's what actually happened. We tested that stock zone at 73 in the 73 half area. We stopped at 73 and a quarter, and we rotated down to the neckline right here. You can see that neckline pullback, push, and then a small pullback to mid VWAP and the prior day's point of control for a continuation, and it pushed into the next area down, which was 58.50, 58 quarter is the next stock zone down. Very orderly, in my opinion. Yesterday's trade was very orderly. Very orderly, and the only thing that was unexpected is this run up in the close. We spent most of the day yesterday with very large lots under a consolidated tape basis, very large lots hitting the bid and really driving the delta down most of the day with price. So as the market walked back up into the point of control, we had a point of control from the prior day, from Monday, in alignment with the point of control from yesterday, which was also in alignment with the point of control of the overnight session. Expected chop, and then I expected it to start to resolve itself downwards again, given how it's traded and how it's traded throughout the morning. But instead, it actually breached the IB again, and buyers came in to cover. Here's what that looked like. So this is the relative delta. And for those of you who haven't seen the chart, this is just price up here. The top pane is just the S&P prices. This is on a 1 minute bar chart. These candlesticks represent the total delta. The yellow candlestick, the yellow line represents a what we call very large delta. These are 100 lots or more consolidated. In other words, we take the split up order and consolidate it back because the CME actually puts out that information. It's called a tick ID, and we consolidate that back. It's not a reconstructed tape or anything like that, which is really um, somewhat of a guess as to which trades belong together. This is an actual confirmed, actually confirmed with a tick ID. We consolidate, the software consolidates those orders back, lumps them back so you can see what the actual size is that traded. So the yellow are very large lots. The white are large lots. These are anything between 10 and 99 contracts that traded, and anything that is 9 lots or smaller is orange. So these are the labels: small, large, very large. And my point is, as the market was in this open auction in the morning, the very large lots were very active on the sell side. They were hitting the bid. Remember, these are 100 lots or more hitting the bid. Once we pushed into that 73 quarter against the 73 half stock zone, we did get a little bit of buying, but as it sat in this area here sideways, you could see sellers coming in. So every time the market was sitting sideways, sellers were selling. Very large lot sellers were selling, and the expectation was that for that to continue. Here, the delta sitting, the very large lot delta sitting sideways as we pushed back into the prior point of control, prior and current point of control. And my expectation is as soon as the price starts breaking lower, these guys are going to start selling as well, but they didn't. What they did instead is, as price drove higher, there seemed to become buyers, and that could just be a squeeze. That could be a squeeze or whatever, but on the close, we could see a lot of very large lots covering. That's really covering that's happening right there. Okay, so that's how things played out yesterday. Let's get that out of the way. So we had a neutral day. Not only do we have a neutral day, what kind of a day did we have? We had a neutral extreme close. A neutral extreme close means that the auction was interrupted at the close, and it was not done because it closed at the extreme, which also means that uh, it hasn't found its sellers, and if it hasn't found its sellers, guess what the auction says? The auction says it is likely to continue in that directional pattern, in that direction until it does. And so the expectation is overnight, we are expecting to see a higher high in the Globex session. That's the normal behavior. So on the reopen, we go completely sideways during the Asian trade. European markets, the European Treasury markets opened here. The European cash markets opened right here. And then from there, we get the drive up and we have a double top at the high, basically at 29.88 and a quarter, 88, with a point of control near highs, on a double distribution. And this looks like it is likely to push to continue pushing. Now, 29.90, I have there are four measured move targets of various swings there. This is likely to present potentially a mathematical resistance. I don't put too much stock into that, but we're getting awful close to the millennium figure, okay, to the 3,000. Not that's a big deal other than the fact that it's a round figure. And so to me, this doesn't look like it's backing off at all, okay? So with that being said, let's have a look at what we're expecting for today. Oh, let's set this up. All right, so the primary scenario for today, the expectation is for an open auction that pushes that high. I expect some reversion to the prior day. Remember, these 2 days are completely in balance. Points of control are on top of each other. Okay, the overnight low did not bother to push into that accepted area. So the expectation is that there's a fair amount of strength here. I'm expecting it to dip down, impulse up, and then start to walk its way towards that 3,000 figure. The catch here is that the market is closing early, and the bigger players are going to be on their yachts and boats and stuff this afternoon as early as possible. So not sure we're going to get much range. The leg that pushes higher is is a low probability because we're likely to die out pretty quick. But at a minimum, I'm looking for us to push into 29.90, but I'm also looking for a reversion back into the high of about 29.80 as well. I'm expecting an open auction out of range that just sits there. If not, we get responsive selling right into this 29.80 area, consolidation dip, push up, and then up into the 29.90, and then hold steady and sideways as scenario two. Again, expecting lower range, lower volume. There are lower, I mean, look at the number of viewers today, 390 390 on YouTube and about 300 or so, or 180 it looks like on Periscope. It's just already you could see that the numbers are much lower and the volume is much lower already as it is. So expect some holiday trading. Be conservative today, please. It's not smart to go into the holiday this way. I know it's not a holiday for you if you're not in the United States, but it's just tomorrow is likely to be very, very quiet. By the way, there's no trader bite tomorrow, and there's not going to be a trader bite on Friday. I will be here, but there's the trade on Friday is expected to be very slow. There's not much to talk about. I will release comments on Twitter, and of course, I'll be in the Convergent chat room and talking as normal on Friday if there is action to be talked about. But I'm not going to do a trader bite. It's not going to be very active on that day. Um, um, is what I expect. Okay. Good luck today, and I'll catch you. I'll catch you Monday. Take care.